You know what I'm saying? All this built up on it. Remember before we was talking about the risk to reward. I was like, the longer we slide to the right, the more people gonna try to start to trust this as support. And this right here is gonna strengthen the risk to reward. Because before, like the risk to reward coming above this buy side was, you know what I'm saying, we here, like over here during this time we first started talking about it, right? And we made this first higher low right here. It was like when we was right here, was like if we make a higher low, that's going to help people strengthen their risk to reward coming to here. Because before, the risk to reward was from here all the way back here, or from here all the way down there. So it was more risk than the reward. Now we got this big consolidation area, right? And the risk to reward now will be from here to there, right? It's a better risk to reward. So if we take out this sell side below this right here, coming to this daily breaker right there, that's all the more reason to pop up. Again, you never know. You can get a breaking market structure to the downside, come and sell off. But that's why I say it's setting up to pop. It's setting up to pop because we just been consolidating right here. We came this close to this high and we just been consolidating, right? So think about all the people that went long back here, right? That's they payday right there. Anybody that went long down here after we ran that sell side liquidity, right? This is when the Dow failed to make a lower low. Let's go back and look at it over here. Let's put it on daily candles over here on the divergence chart, right? Was it the which one was it? Yes, it was. It was the Dow, I think. We talked about it before. Let me see. Yes, it was the Dow. It was the Dow. Failed to make a lower low right there. So ES, right, made a lower low, right, from October 3rd to October 13th, made a lower low. The NQ from the 3rd to the 13th made a lower low. The Dow from the 3rd to the 13th didn't make a lower low, right? That was the SMT divergence. When ICTV talk might be like, hey, in the spring, look for one of the indices that failed to make a higher high. And that's your sign that we're getting ready to reverse into the summer, right? In the fall, look for the indices that failed to make a lower low. That's your sign that we're going to reverse until the spring, right? So in the fall, the ES made a lower low. We took out the June lows, right? Everybody took out the June lows. All three indices took out the June lows right here, right? We took out the June lows. F2, right? The June lows were taken out. Boop. The June lows were taken out. Boop. If I get this right, y'all know what I'm talking about. The June lows were taken out. Boop. Right? Once the June lows were taken out, everybody ran sell side liquidity on the June lows. Then the ES made a lower low. The NQ made a lower low. The Dow didn't make a lower low. That was your SMT divergence showing this is the fall SMT divergence that ICT was talking about right there. And then ever since then, the Dow been on steroids. And then the NQ and the ES, and then the, you know what I'm saying? Whenever the Dow and the YM be like kind of apart from each other, the ES be the red-headed stepchild in the middle. So the Dow blasting, like the Dow even came back and took out August highs. The ES is in the middle because the NQ been lagging. So tech been lagging a little bit, right? And the Dow been blasting. So the ES it's been going up, but it's in the middle. So you notice how it's in the middle, like the Dow. Now the Dow is consolidating at August highs. The NQ is consolidating at the low end of the range, and the ES is consolidating in the middle of the range, right? The ES consolidating in the middle of the range right there, right? So as the overall, man, I just peeped that. Let me check this out. I just peeped that when I said that. In the middle of the road. Look at that. Y'all seeing that live with me. Look at that. In the middle of the road, right? And we skating on the top side of it. We skating on the top side of it in the middle of the road, right? We're in a premium of this entire move from August, right? We're right at equilibrium from the August high down to the October low. We're right in the middle of the road, right? So if we come down in there, right? So we came down, we ran sell side, the market came back to equilibrium, right? So now we're right at equilibrium, consolidating that equilibrium. So now we pop down, run a little sell side liquidity up under there, maybe even fill in our daily fair value gap, raggy, and then it can be to the upside, right? Because the market already said, I want to go this way, but not quite yet. So there you go right there. I just noticed that, right? I ain't even really peeped that until just now. We're right there in the middle of the road. That's why we've been consolidating for all these days. Where does the market like to consolidate at? It like to consolidate at equilibrium. And that's how, you see how I just got back in sync with the algos on the larger time frame, right? That's what I told you. This is how I get in sync with the algos. All right, I just look to see where the market consolidating at, run my fibs to highs and lows that make sense. And then that's when you can see. So on the larger time frame, right? The algos, the dealing range that the algos are working on the larger time frame is from the August high to the October low, right? And I'm gonna throw a time frame out there, just say like for the whole year. For the whole year, the algos are on this part of the yearly price leg from the August high to the October low. Because this is the full year right here. Pretty much right over here somewhere is the full year. So that's pretty much the full year right there. Right there. That's the full. This is the full year price action right here. So you got this piece of the price leg, pull back. That piece of the price leg, pull back. That piece of the price leg, pull back. Like we took that piece out right there. So we came up, had a break in market structure on that piece, that this piece of the price leg is taken out now. Then now this piece of the price leg, we came down, boom, made the new low, ran the liquidity, and now it's setting up a reversal. You see what I'm saying? So it started setting up a reversal right there. That's where the Dow didn't make a lower low. So now we're on this piece of the price leg on the overall yearly thing based off how the algos are trading right now, right? Right there. So this piece of the price leg on the overall yearly time frame, right? So then coming back here, we pushed up, had a break in market structure to the upside right there, traded back down, came up here, looked like it scrunched up, but it looked like maybe some order blocks or something. Yep, some daily order blocks right there. Hit them daily order blocks, had another break in market structure to the upside. We got a fair value gap there. We got this big breaker right there. As we know, we marked that over here already. Right now, we're coming back down to this, testing this break in market structure. So that break in market structure is right there at equilibrium on the overall yearly time frame, right? This is our monthly box that we're looking at right here. And that monthly box is inside this yearly box right here. So the yearly box, the line will be up there at this high right there. Right? That's what the algo is on right now. Based off the look consolidation that it's doing. God dog it, Tim. Click the right thing, man. We just took out the sell side liquidity on the weekly. We just took out the sell side liquidity on the weekly. What's a good color? for something on the yearly that we haven't used. We used all these colors. I'm just gonna put this crimson right there. That's good enough. No, that's not good enough. I don't like how that look. I mean, if I put it on 100%, I saw something move. Somebody put something in the chat. Right there. So, based off this, where it's looking like the algo's operating on the yearly from the August high down to there, right? This breaking market structure right here is at equilibrium. That's at so we're right at equilibrium. We're in the middle of the road. We got a breaker and a daily fair value gap right here at equilibrium. So in Lil Timmy Rogers' world, this right here is a that's my trade on the yearly time frame, right? We got a breaking market structure right there. The very next candle, we made a fair value gap, consolidated, pushed up, took out some buy side liquidity, coming back down to that fair value gap retrade. That's my trade on the yearly level right there. Right there, we're coming back down into this fair value gap right there, hitting this breaker. Just took out some sell side liquidity after we campaigned, took out buy side on a weekly. Now we come back down, taking out sell side on the weekly, right? So now, any starting to go back up. I'm looking for man, look how delayed I look. Hey, Towns, what you doing on my screen? Get off my screen. I lost my whole train of thought, man. What was I can't remember what I was talking about.